Good evening, guys. Welcome back to another Chart Nerd TA video. This evening, we're going to be diving back into Algorand on the daily time frame I'm looking at here for us. So I've got this sort of yellow zone here. This is a very, very key area of resistance for Algo because it was once it was once support, and we lost that support and actually turned it to resistance back here in November. Now you can see that we put in this impulsive leg down for Algo down to, I think it was about 15-16 cents, wasn't it? And from this point here, you can see how impulsively you've actually blown up from these lows, and you've started to work up in this channel here for Algo back up to this yellow box area that I'm expecting resistance. I'll be completely honest with you. I was screaming I think about a week or two ago that potentially Algorand's looking to go to 27 cents, and to be fair, we've nigh on nailed that. We're at I think we went up to 27.43. So at this area, I am expecting some sort of short, and I'm going to explain to you why. So first off, the first conclusion point to why I'm going to be shorting at this stage is because, again, we had this previous support that we're currently running back into as resistance, and I think this area will be a very, very strong area to get back above, and I don't think on first attempt we will break through. If we do, lovely, and this negates the fact that we're potentially coming in for a pullback now. So to negate the fact that I'm about to explain to you, instead of coming back here for a larger pull down, potentially to see the continuation here, we should see Algo break through this resistance and hold it as support, and potentially you could still march up here and move on impulsively. But again, as I've said, this is a very strong area of previous support that now is a very strong area of resistance. So we do need to be cautious, and we are, in fact, on the daily time frame here, forming some sort of bearish pattern into this level of resistance. So this gives us a bit more confidence. Okay, potentially, if we start to see a break of resistance, we could go long. If we start to see a loss of support in this pattern, we could go short. So again, off of this low chain link, Algo had a very, very impulsive few weeks. So literally from the start of January, the first 2 weeks into January, you had a very, very impulsive move. At this point, you did come back in for a correction and found support at around 20 cents. Now, since this 20 cents mark, you can see that Algo's been up and down in this level of resistance, a level of support, potentially right now a level of resistance, a level of support, and you're coiling up in this rising channel. Now, this is a bearish pattern, and as I've said, you have had a very impulsive month and a half, and Algo's actually up from its lows here around 67%, which is amazing. It's great. But again, you don't want to shoot off into space. You do want to come back for support. You do want to recharge the batteries for another breakout. So what I'm looking for potentially here is the fact that we've met our 27 cent long target. I am looking for a pullback at this key resistance, because you've got key resistance, as I've said, you've got previous support that's now key resistance. You are forming this sort of bearish rising channel or wedge into resistance, and we have had a 67% impulsive move off of these lows. So in my mind, it seems like a no-brainer to have some sort of healthy pullback to look for continuation of the trend. So this, in theory, could be some sort of really large scale macro wave one here for Algo, where you've come up really impulsively here, topping out a little bit, potentially looking for a rollover of support back down to support on the 20 cents. Now, what tends to happen here, why I've got this 20 cent range in as support, is because where you actually started to form this sort of rising channel here, where you've got resistance, support, if we do see Algo come down and lose this support line right here, okay, this is where I think you're going to be getting the confirmation. If Algo comes down and loses this white trend line, okay, this ascending support, that for me, and turns it to resistance, that for me is your confirmation signal that potentially you're looking to retrace back down to this 20 cents where the pattern started. Because what happens is you start creating the pattern to a negative bearish pattern. If you lose support, turn that to resistance, you start to retrace back down to where you actually started forming the pattern in the first place. Now, what gives a bit more confluence here and why I'm looking for this 20 cent area to hold as support? Well, if we get a fib on from the 27.50 high, the 27 cent high, retracing back down to these December lows at 15-16 cents, what you could see here that's a little bit ironic and gives a bit more confluence is that if Algo was to start pulling back here and did lose this as support and turn it to resistance, okay, this 20 cent area ties up bang on with the 0.50. Okay, so this is the golden ratio. So you've got support here at 20 cents, started forming this bearish pattern. You did rally up, potentially meet resistance, previous support, turn it to resistance, lose support of this rising channel. That's your confirmation signal on the daily. If you start seeing closes out of that support here for Algorand, if we do see the daily candles closing below the support line, that for me is potentially a signal that you are starting to retrace back down here for a bit more of a pullback and a potential 21% correction for Algo. And I think what you'd be doing is just literally recharging the batteries, because it works in waves, guys. The charts works in waves. If this is the low here for Algo, this could be a very impulsive wave 1, and right now you're looking for a corrective wave 2 for support for the stronger wave 3, which will tackle out of this 27 cents resistance and sort of confirm, okay, that this was the potential low here for Algorand moving forward. And I think it would do, if we did come back for a very healthy retracement at this point, look to hold support and tackle above this 27 cents. Things could look very, very good here for Algo moving forward. So I'm going to get the 10 and 20 EMA on. Again, guys, do get this Fibonacci chart on from this high that we've put in locally recently. We're chasing back down to this 15, 16 cent area. The 050 is a golden area to get involved if you're not already involved on this bandwagon. You don't want to buy into big green candles, guys, because you get absolutely shafted on an impulsive move. Potentially buying the tops here is very, very dangerous. Again, nothing that I say is financial advice. It's all for educational entertainment purposes only. I'm just trying to show you what's in the charts and what we're potentially looking for here. So for me, again, on a more zoomed out perspective, just to finalize, previous support, okay, back from I think it was June all the way till November. We lost that support. We've now V-shaped recovery back into resistance. So we've had quite an impulsive move back into previous support, looking to turn it to resistance. At this point, if we do fail to get back above, fail to close above 27.50 on the weekly, or even the daily, and start to retrace here, I do think once you lose this support line of this rising wedge, that potentially you are going to start retracing down to this target here. Now, I think this will scare a lot of people out. But again, if you look at the weekly time frame here, putting back to an area of support as such, I don't think would be too dangerous, because again, what tends to happen during bear markets and once you recover, a lot of projects on their first time of reattempting previous support and turn it to resistance don't necessarily always break through on the first attempt. So you've got, again, we had this was called a right angled broadening wedge, where you coiled up with a horizontal level of support. You was putting in higher highs, it looked great, okay, but eventually you got shafted down, you lost that support, and as I've said, guys, now you've had this V-shaped recovery into resistance. So what I think I would like to see here is some sort of stronger foundational pattern for Algo, where you've come down, you come back up into previous support, turned it to resistance, come back for a higher low here and look to start coiling up, okay, and that higher low for me was that 20 cent range, okay, and if you did do that, again, you've got a low, you've got a high. If Algo holds 20 cents and starts to rally up and tackling above 27 off of this low and puts in a new high, i.e. retracing back up to this 45 cent range and then come back for support, you're looking at your wave 1, your wave 2 right here for a 20% correction, break the 27 cents, you've got a wave 3 potentially up to this 40 cent range, then have a healthy wave 4 looking for a wave 5, and you're starting to flip the script here, and this is the bottom in for Algorand. So it's all a massive potential, and one way to get this Elliott wave relatively accurate is to say, okay, right now, again, this is another area why I'm looking at resistance, guys. I'm sorry, I should have showed you this before as well. But retracing from this low to the 45 cent high, you can see that the 050 is at 27 cents, and that's what we're currently running into. So this is why I would expect another pullback and then look for support. So, but yeah, what you can see here is potentially this is a wave 1 into resistance. A wave 2, we need to hold support on 20 cents, guys. If we don't, it's going to be chaos. I'll show you in a second. But wave 2 potentially to 20 cents. A wave 3 breakout, tackling us above the 27, potentially up to the 702, come back for support on a wave 4 and look for a wave 5 and get yourself back up to this 45 cent range. And again, this would be the lows in here for Algo, because as you're coming, you can see you're coming up, you're ascending in support, you got a low, a high, a higher low, and if you start to tackle out the 27 cents, okay, and turn that previous resistance into support on the wave 4, you could be looking for a retracement back up to 45 in the near short term here for Algorand. So again, just to confirm, guys, it would be nice to see some sort of foundational structure building up over a bit of time here, holding support, creating higher lows, okay, and having this horizontal level of resistance, because once this 27, as I said, once this 27 cents gets tackled, you're looking to retrace to previous highs where you met resistance, and this could be 45 cents, crash down, lose support, hold up, build foundation, coil up, break back out, look to retrace back to that 45 cent mark in the near future for Algorand. So again, guys, my final takes from this video: bearish pattern here, met the technical target, ran back up into previous support, okay, turn it to resistance. Right now we need to see a healthy pullback to 20 cents I'm looking at for a continuation and a breakout of this 27 to get us back to the 45 in the near short term for Algorand. Now the bearish case scenario here, the most ultimately bearish case scenario is that if we do run into resistance at this point here, come back for support, and we fail to hold the golden ratio, and we fail to hold 20 cents, 21 to 20 cents, okay, in this golden pocket, and you do start doing something like this where you're turning these fibs into resistance and you're retracing back down to this 1 fib. If we was to continuously lose this 1 fib and see a close below that, I think Algorand's targets sit between 13 cents and 11 cents. And that 11 cents, you can see, would bring you actually back down to this wick here in March 2020 for a level of support. So again, guys, we do need to be cautious. On this pullback, if we have run into resistance and we do get a pullback, this golden ratio has to hold to put in a higher low, and we have to start tackling above and re-attacking this 27 cents that we currently could be getting rejected from. So guys, we do need to be cautious here moving forward. They are my targets to the downside if we lose this low here in January, December that we put in. But yeah, we do need to be cautious. I think what we need to see for more confirmation here on the weekly is actually see ALGO break above the weekly 20 and start to hold these EMAs as support as they're dragging up, create a bullish cross, hold them as support, and you can get your continuation. And we may not even come back down here for a larger correction. We could literally start an impulsive move back up to 45 cents and have a really large wave 1, a stronger wave 2 pullback, and then look to break out. So that's also another potential, guys. Again, so if we do go to the daily quickly before I go, and we look at the daily here, you can see that if we do actually start to break out, because these aren't always, this bearish pattern doesn't always have to play out to the way that you'd want it or expect it to. So we don't always have to lose support to confirm the downside retracement. We can also break out. If we break this resistance, again, that's your confirmation signal, I think, in my eyes, to go long, working your way back up to these 40 cent areas. So if we do break out of this 27 cents and we do start tackling above this resistance, then potentially you are, and holding it as support, then you are still looking to go long, and you're still in this monster impulsive wave up here for Algorand. Okay, guys, so again, break resistance and hold support, go long. If you start to come down and lose this support line and hit it as resistance, go short, back down to that 20 cent mark, which is where this rising channel actually started. Okay, guys, so yeah, I hope you enjoyed the content. If you did, please do like, comment, and subscribe. Hit that notification bell from Chart Nerd TA. Take care, guys. Peace out.